If someone is earning well today, especially in their 20s, what should they avoid?
Somebody earning well in their 20s, they should avoid. The first thing that I would think of is chasing too much of lifestyle, because lifestyle has a way of inflating your expenses in the way you can't even imagine. A lot of videos, YouTube, and everything force people to take decisions that why should I miss experiences? Why shouldn't I go to vacations and all?
Hi, we have a very special guest today, Mr. Siddharth Dwarkani. Hi, Siddharth. How are you?
I'm good. I'm good. How are you?
I'm good.
Yeah.
Yeah. Please introduce yourself.
Okay, hi. So I'm a commerce graduate with an MBA from IIM Lucknow, post which I have had about 18 years of work experience, majorly with the telecom companies in the marketing function. Currently, I have completed my CFP as well as NISM certifications. Uh, I am awaiting my SEBI RIA license as we speak.
What's the right age one should start financial planning and take a help from financial planners?
Normally, people will say as soon as possible, as soon as you start earning. But there are a few things that people themselves need to be clear about before they come to a financial planner. In the sense, my expense, my income. Very early in life, people are not sure of which city they will land up in, which industry they will land up in, or which function they will land up in, right? Whether they'll get married, not married, kids, no kids. So I think from a financial planner's perspective, also having a lot of information early on helps. Right? I'm not saying that any additional information after the financial planning will not be handled, right? There are always cases where people have changes in their lives even after the plan is done. And the planner, the advisor helps people out, right? But to my mind, from the first step of a financial planning, people can wait till they are married at least. If I were to give you a ballpark number, I think somewhere between 5 and 8 years of work experience, right? That means people would be around, say, 28, 30 years of age, depending on when they started. There are high chances that they would have been married by then, and they might have also landed in their choice of industry, city, career, and then might get stable in life. Uh, However, investments have to start as soon as you start earning, in whatever way, whatever form. Every office, every company will have that one or two people who will be there to advise people. Just have to figure out, find out. Uh, and you can start investing as soon as you start earning. But a full-fledged financial planning can wait till maybe you are 28, 30 years of age, ideally having married or decided that you will not marry.
So, if somebody is starting their financial planning, by which product they should start with, or from where they should start with?
So there will be two ways to do about it, right? Uh, if you already have an advisor in your life and he's already guiding you, then obviously he will be the better person to tell you depending on what you already have in life, right? What is missing, essentially. On the second part, if you are not engaged with an advisor or with a financial planner, but you realize that you need to do something correct, right? There are a few things that can be suggested. One is taking their life insurance in the form of a term plan, not a policy or a money back policy or an endowment policy. Uh, Almost all the life insurance companies have their online calculator to help you figure out the right or the almost right number in terms of insurance coverage. So that you can have a look at and take your own term insurance policy. Uh, if both of you are working, both the spouses are working, then insurance coverage is required for both of them. Second would be a medical insurance cover. While most of the Indian companies, well, most of the companies in India have a corporate policy, but the corporate policy will cover you only till the time you are an employee of the company. If you or your spouse decide to quit a job and not work or figure out something on your own, or by any chance if you are laid off, then the cover goes off, right? So what is more important is to have a personal medical cover as soon as possible. Uh, a base cover of say 8-10 lakh rupees and a super top up cover of say 40 or 90 lakh rupees uh, for a person of say 26 or 28 years of age should cost you around maybe 10-12,000 at max.
In a year.
Per annum, yes.
Per annum.
Uh, that is point number two. Second is to have liquidity or an emergency fund to be created. There are different logics, different multipliers that people use for to calculate how much money
What's
is
the
to be
best
required.
logic according to you?
I think again, if both people are working, then I think 3 to 4 months of expenses can be kept as an emergency fund. If a single person is working, then I think a 6 to 8 month cover is required in the sense that one person losing a job will definitely impact the entire family expenses. And in today's world, there is no guarantee in the sense how many months it will take you to get your job back, right? So if you are a single income family, then 6 to 8 months of emergency corpus. If you're a double income family, then maybe a 3-4 month emergency corpus. So essentially, three things we spoke about, right? Life insurance, medical insurance, emergency cover. The fourth thing that I might want to add in is an average of 2 or 3 months of expenses kept in bank or a debt fund or a liquid fund separately. Not an emergency cover, but more of a liquidity fund. So that in case in any month or 2 months, if you exceed your normal expenses, then that money is there to help you cover. So emergency corpus is for the risk of losing job or losing income. Liquidity buffer is for cases where your normal expenses might go higher than what you expect. So that will ensure that your investments and everything else do not get impacted. So fourth thing essentially.
Are credit cards financially beneficial for people or just a smart way to trap people?
Credit cards are a good instrument if you know how much to use credit cards. A lot of so all credit cards will have a credit limit. Right? That doesn't mean that you have to use the entire limit, right? There is a thing called credit score that impacts your ability to take a loan anytime you want it, right? And credit cards have a big way of impacting that credit score. Normally, people recommend, or normally financial advisors recommend that you do not cross 30 to 40% of your credit limit in any way possible. That is point number one. Point number two is a lot of people mistake the fact that minimum due is what they have to pay, right? A lot of people do not understand the concept of minimum due versus the total due and the interest impact that it has. So a lot of people pay minimum dues simply because they might have overspent on their cards and don't have the sufficient bank balance to pay it off. That is when it becomes a debt trap for people. And unfortunately, a lot of Indians get caught in this trap, and they have to go through a credit redressal mechanism. Lot of litigations happen, lot of disputes happen, and then eventually they have to agree to what do we say, a middle path wherein you pay something, the bank agrees to take a haircut, and so on and so forth. But it's not a good experience for anyone, right? And in the entire process, your credit score gets heavily impacted. So I think for people who have certain income and who can actually keep a real track on their credit spendings while ensuring that they do not cross a certain limit. Of course, I'm not saying that sudden ad hoc expenses will not happen. They will happen. But in any case, do make a point to pay the entire bill completely as and when the due date happens. That is the key mantra for keeping your credit score happy and not fall into any kind of a trap. So, but yes, I have seen people who have made a mess of their credit cards, who have really gone down a very harrowing time with credit cards. I think these days also a lot of banks have kind of devalued very high-end credit cards as well. I think credit cards will not remain a major show-off feature or a major uh, financially beneficial feature for long. The way banks are devaluing even high-end cards, I really don't think that credit cards are going to be a sought-after thing for many people, say within the next 2 to 5 years.
Our EMI and loans are good options for lifestyle purchases.
Yes and no, I would say. If you have a clear track on all your expenses, and if you know that these EMIs or these loans is something that you can really pay off without any kind of disruption, then they are a good idea, especially in scenarios where credit cards give you extra cash back on a no cost EMI kind of situation, say on a purchase of a fridge or a television. I think it's not a bad option. The only suggestion that I would have is to double check on the additional processing fees that might get added. Double check on the EMI tenure exactly. Do not try and ensure that you do not go beyond the 6 month EMI phase. While for a longer tenure, the EMI amount will reduce. That will sound more lucrative, but eventually, across a lot of times, we have seen that a 9 month or a 12-month EMI eventually leads you to pay more amount in return to the company. Second point is obviously when you're looking to purchase a television or a high ticket item online, uh, the the merchant will also do their own credit check, right? So these days, merchants also have their own credit check, their credit score, and then they tell you whether you are eligible, not eligible. So that means people are protected, but a merchant still won't know whether your expenses for that month or that quarter may have exceeded heavily against your normal expenses, right? So a merchant will not exactly know your bank balance. That is where the trouble may hit you. Your credit score is a long-term score fetched over the last 24, 36 months of activities. But what has happened in the last 3 months is something that the merchant will not know. That is where the danger may lie, right? So to my knowledge, I think these days about 60% people who take EMIs or loans on credit cards for high ticket purchases, they are able to handle it. About 30 to 35% people still struggle with it because it's only a question of deferring the payment, deferring the problem to a later date rather than face it today. Uh, a lot of times, television or a lifestyle upgrade happens uh, due to social media or due to society pressure, show off, and so on. So I think people really need to be aware of whether they really need to buy something, what is the exact reason to buy that thing. Of course, if your older television is 10, 12 years old, then obviously you need to buy a new one. If your fridge is 10, 12 years old, 15 years old, definitely need to buy a new one. But just because a new fridge has come at a discount and your existing fridge is only 4 years old, It doesn't make sense at all unless your family has expanded with 10. Right? If you're a family of three and suddenly your parents have come to stay with you and there is a second child, so within a year, if from 3 to 6 you have gone, that might be a reason to buy a new fridge or a second fridge. But I think a lot of decisions need to be taken after a lot of care, a lot of thinking, a lot of discussion within the family. Uh, but again, it's an eventually an individual decision. Uh, Buy now, pay later, or a 6 month no EMI, no cost EMI is obviously very lucrative. People really need to have a hang of their own finances before they plunge into it, and to actually be able to justify their purchases to themselves, to nobody else.
What is the benefit having multiple incomes in today's economy?
I think multiple sources of income sound good, right? But what matters is how much is each source contributing, right? If you ask me today, for a salaried individual, their salary will still be contributing maybe 70-80% minimally, right? That would also depend on their age, right? With which stage they are in, which career stage they are in. To my mind, a lot of people think that investments or buying properties, selling properties, doing day trading, etc., or investing in other startups is a good way to have multiple sources of income. Sounds good, but to my mind, I really doubt how many people actually successfully manage to reduce their dependency on salary, right? I don't have any number, but I really doubt that beyond salary, a second or a third or a fourth income is really helpful or is really strong enough for you to be able to quit your job. Because one, if you want to take a loan, a bank will not recognize other modes of income. A bank will only recognize what comes to you assured every month,
As a
right, for
salary.
calculation of their EMI eligibility, etc. Same thing happens on a credit card or any other loan for that matter, essentially. Second is a lot of retiral benefits that are associated with your salary. They are not associated with any other income, right?
Absolutely.
You have a mandatory PF deduction. You have some companies, you also have a choice of mandatory NPS deduction, which keeps your retirement kitty growing, which is not there with any other kind of income source, essentially. Uh, Third and major point is if while working as a salaried employee, if you really have that much of time to get to generate two, three, four different kinds of incomes, then I would really doubt how much are you actually contributing in your work. And sooner or later, that might catch up, right? So, to my mind, I think having an alternate income source is very good, but people should not really get into a rat race of creating multiple income sources. These days, I'm seeing a lot of people buy farmhouses outside Bombay, outside a metro city, and start cultivating rice or fruits or mangoes or strawberry. Right? Sounds good. Uh, Again, all these are seasonal activities. Uh, so obviously, the land or the property that you have purchased is not being used properly for some time of the year, and the time when you might be actually required to give your attention there, your work may actually force you somewhere else.
Yeah.
People do manage, having said that, but majority of Indians will not be able to manage, right? Uh, because buying a property is not easy, right? You know, there are legal issues, there are trust issues, background checks have to be done. A lot of things are required to be done before you buy any kind of a property, right? For to buy something outside of your city from somebody you don't even know, it's a major leap of faith. right? Only maybe the top 0.1 or top 0.5% people might be able to do. For the remaining middle class Indians or even the upper middle class Indians, your salary or your ongoing business income will always continue to be your biggest source of income. Any number of income sources that you generate, the contribution will always remain less.
What is better, physical gold or digital gold?
No simple answer. It's actually both emotional as well as practicality, right? Indian families, have kept gold through multiple generations. We all keep reading newspapers saying that Indians are the biggest consumers of gold, and a lot of it in jewelry format, right? I think physical gold gives you a lot of comfort, it gives you a lot of stability, emotional as well as financial. That this is what I have. 10-gram gold will not go to a 9-gram, right? 10-gram gold will remain a 10-gram. The prices will change, the prices will increase. Uh, the only issue with physical gold is that there is always the chance of theft, there is always a chance of impurity coming in, there's always a chance of your merchant uh, trying to cheat you in terms of purity, in terms of grammage. There is always additional cost of storing it in your locker, or even at home you have to keep a separate locker, lock and key. There's always
Paying deposit for it.
agree paying a rental for it. There is always a chance of, having said that, there's always a chance of theft happening, right? Even in a bank locker, even in your own locker, right? On the other hand, digital gold in many formats, there are ETF, there are fund of funds, there was sovereign gold bond that came up. Uh, Sovereign gold bond was a good concept. Uh, from an ETF perspective or a fund of fund perspective, there is no way that the price of gold will actually reflect in the value of your investment because of expenses that are fund management expenses, there are other expenses that keep happening. Uh, to my mind, physical gold is better if you know that you need physical gold sooner or later for marriage purposes, for gifting purposes. If purely for investment, then digital gold any day is far, far better. There are electronic gold receipts that have just been introduced by NSE in India. While more details are still awaited, what is interesting is that you can buy gold online, and then if you want, you can get it converted physically. That seems to be the exact sweet spot for Indian middle class. But I think a lot of clarifications are still required in the sense of how people will invest, who will decide the carat purity, or whatever happens. So a lot of operational clarifications are required, but I really think that EGR might be the sweet spot that India needs, a combination of digital and physical. Uh, so we remain to be seen. But I think from a purely investment point of view, it's always better to have a digital gold in place, unless and until you are very sure that physical gold will be required someday in future. Then obviously, you can take the risk of buying a gold coin, gold bar today and get it converted to jewelry sometime later. So yeah.
Do you think comparison culture today is, damaging the decision making, especially the financial decision making?
Yes, comparisons are there everywhere now, be it career, be it investments, be it your property or whatever, right? Even in the name of actually show off or being kind of told that you have less compared to somebody else. So yeah, pretty damaging. And I think the influencers, lots of YouTube videos show a lot of things. So of course that is damaging, and that is what people see, and people think that I'm doing less, right? So that leads to a lot of wrong decisions because people chase fads, right? Whatever is in
Yes.
fashion and whatever is being shown on a video or shown on a TV screen.
Vacations.
Yep. So yeah, pretty damaging financially as well, and a lot of wrong decisions are being taken because of that.
If someone is earning well today, especially in their 20s, what should they avoid?
Somebody earning well in their 20s, they should avoid. The first thing that I would think of is chasing too much of lifestyle, right? Because lifestyle has a way of inflating your expenses in the way you can't even imagine, right? A lot, of course, into your previous question also, right? A lot of videos, YouTube, and everything force people to take decisions that why should I miss experiences? Why shouldn't I go to vacations and all? But for somebody who is young, for them, starting to invest is very important. How much, where, and you know, figuring out their own asset allocation, their retirement numbers, that is still far off. But the first things first is to start whatever they can with.
Do people financially prepare that much for retirement compared to the emotionally they are preparing for it?
I would say emotionally being prepared for retirement does not come till the time you realize that retirement is kind of very close, right? Till the time you are busy in your life, you have work, you have family to look at, you have other social obligations, right? Feeling retired doesn't hit you emotionally. Of course, from a financial perspective, retirement is always there at the back of your mind, right? In the sense, how will my expenses be met, or how will I look at my, or maybe if some major goals are coming after retirement, right?
Yes.
Kids education, kids marriage, other social obligations, buying a house, buying a car, etc. A lot of people plan for vacations after retirement, right? So how do they fund all of that? A lot of things people think that might happen easily, doesn't happen easily. A lot of planning needs to be done. To answer your question, I think people prepare better for retirement financially than emotionally. Yes.
In your experience, does money actual reduce stress, or it just
Okay. To my mind, I think money does not reduce stress simply because it changes stress, right? A lot of things that you might otherwise not be able to do with money, you can do with money. But then having money creates its own problems of safety, security, your own awareness issues in the sense whether I'm doing right, I'm doing wrong. And if you have money, you might make a lot of wrong financial decisions as well, right? So there are different kinds of stress that comes with money. So I think one stress goes, the other comes in. So stress is always there, right? So
you have
it
money?
changes the forms of stress.
What's one financial habit that every 21-year-old should start immediately?
I would say two habits. One is starting immediately to invest into a mutual fund. It can be a balanced fund, can be a hybrid fund, can be any lesser risk fund, if you were to ask me. And second is obviously do not fall into the trap of LIC policies and ULIPs and any other such money back guarantee product that comes along your way. So, two things I would say, one to do, one to avoid.
Has social media made younger people financially smarter or just distracted?
It works both ways, right? I think social media has made people more aware of what's happening, what's available, not just a few mutual funds or equity shares or a few FDs, right? Social media gives you that kind of awareness that XYZ things, so many things are still available for you to look around and invest. Distracted also, yes. No, we have multiple studies, multiple people telling or shouting across against social media that youngsters are spending more and more time on their phone, more and more time in their rooms, and so on and so forth, right? So, if you ask me from a financial standpoint, influencers are one of the big reasons that people are getting distracted. You open Facebook, there are a lot of groups, lot of people giving away financial gyan, financial advice. Uh, what people don't understand is one advice is not will not work for everyone, right? But again, they can't decide whether this advice is from right. If somebody has saying something that XYZ stocks has gone up 10 times in the last 5 years, right? Then people immediately start looking for the multi-bagger, next multi-bagger, and so on and so forth. And that is when mistakes happen. That is when people lose money also.
Yeah.
So social media works both ways, but if you ask me, it is more distractive than it has a positive impact.
Do Indians avoid difficult money conversations like wills, insurance, retirement planning, and why?
Yes. There are multiple reasons for it. I think you would have read many studies wherein people will give different numbers. 80% people do not have wills or whatever, so on and so forth, right? But simultaneously, you will find a bigger percentage of people having LIC policies, having ULIPs, not having a term plan, not having a medical insurance. I think one of the bigger reasons are that parents don't want their kids to know what they own, right? In the sense, a kid is supposed to focus on their studies and do nothing else. Why burden him or her in the sense, so why give them the knowledge? Second is if a family is going through some trouble, financial trouble, even then people don't want their kids to be kind of hassled or be aware, what's happening, something is happening, right? Third point is I think people don't want others also to be aware, what's happening, what do I own, what all do I have, uh, even maybe it's a lawyer or be it somebody else, right? Because people are, to my understanding, people are really kind of afraid, this person might tell something to somebody else and,
Tend not to disclose anything
whatever.
about the financial.
Exactly. So multiple reasons why people don't make a will. Obviously, people think nomination is enough, which is wrong, right? People say ki, wills are to be made when I'm towards the end of my life, when I know everything, when I can't have any more assets, right? That is when I make a will. So that is one reason why it keeps getting postponed. Because people keep buying assets, mutual fund values keep going up, new things keep getting bought, and so on and so forth. Uh, Insurance, obviously, people say that LIC policies are insurance, completely wrong. Unfortunately, term plans are not sold as much because incentives are not there to sell a term plan. Any bank relationship manager will never sell you a term plan. Right? They'll happily sell you ULIPs. Yes. Right? That is one of the bigger challenges. In the sense, pure term plan or pure mediclaim are not sold by all your wealth managers, your relationship managers, because incentives are not there, right? So, which is where social media has kind of helped create awareness. But again, a social media podcast or a social media platform will not tell you which insurance is best for you at any given point in time. That is where a financial planner always comes into the picture, right?
Do you think internet has made investing pretty easier than it is actually?
Yes, internet has made investing pretty easier in the sense that a lot of things are now done online, be it KYC, be it SIP, be it any kind of a comparison of products, comparison of funds, comparison of AMCs. So yeah, internet had made it easier even with the coming of AI. You just have to give a prompt, you get answers. But again, with AI, I think a lot of issues are being raised about the accuracy of the answer. So that is one thing that people have to be aware of. What the internet is not able to do is to be with you emotionally. You can put your age, your income, your expenses into an AI platform. Some will create some plans, right? But an AI platform will not debate with you, right? Or an AI platform will not be bothered to understand your background or your history. In the sense, a lot of people do things because of certain mental background, right? To us, it might look right or wrong, but to that person it might seem to be an absolute necessity in life, right? Since we do not know their backgrounds, or an AI platform or an internet service provider or a website will not know their background, so they will just spell out a recommendation or a suggestion basis whatever input you give, right? They will not ask for any more input also. So I think internet has helped investing easier, but the work before investing still has to be done best by a human being.
Do you think today's generation is more under financial pressure compared to the previous one, and despite of earning more than them?
Yes and no, obviously. As I said, the more the awareness is there, right? A lot of information availability is there. Uh, the ability to do a lot of things faster is there. So the generation today knows that they can do a lot of things at the click of a button or whatever. They just have to do it.
And tend to spend more?
Yeah, the spending and income aspect of it is always there. They are earning more, they spend more. The previous generations used to stay in one city, two cities, so which is why uh, the expense, a lot of expenses used to not happen. Today's generations is more open to move between cities at least before they get kids, right? Uh, but I mean, a lot of cases, husband and the wife both are working, so a lot of societal pressure is there to look good, to be good, in the sense that perception matters. Yes. So that in turn leads to lifestyle expenses happening. Uh, with availability of credit cards far more easily today, I think a lot of expenses happen without too much of a thought. On one hand, bigger expenses happen through credit cards, very small but very high volume of expenses are happening through UPI, because as long as UPI is happening, that means you have money in your bank, right? So that also kind of gets hidden from any kind of a suspicion of low balance or no balance, essentially. To I think the challenge happens when it comes to lifestyle expenses, when it comes to experiences, when it comes to a lot of things that somebody else has done, so I should also do. And unfortunately, those expenses keep growing, right? Till the time you realize that you are in a mess. Otherwise, the expenses do not have any control, right? With availability of lot of quick commerce, right? Lot of things keep getting ordered that earlier generation did not order because of lack of availability. In the sense, furniture keeps coming home. A lot of platforms like Meesho and other platforms have
Merchandise,
made
footwear.
clothing
Yes,
far
yes.
far more easier. In fact, our parents would have had to go to a shop to buy, try and buy only one because they don't know what to do with the others. Today's generation is thriving on return and replacements, right? So a lot of orders keep coming, a lot of things get rejected, things get returned. But in turn, eventually, out of 10 orders, you still keep six, seven orders with you, right? The ease of ordering, the ease of getting at home, and the assurance of a return in case things doesn't work out is leading people to overorder, in my sense. And that is why lifestyle expenses keep increasing. I, as a kid, did not dare to ask my parents about lot of things to buy and whatever. Today's kids are happily asking their parents to buy this, buy that, and parents are also trying to, not what do I say? What is the right word? Not annoy the kid, essentially, right? Because parents are busy with their jobs, kids are busy with their schools and their laptops and mobiles. So parents are doing whatever they can to keep the kids,
Gentle parenting.
happy, satisfied. That is also a bigger, sadder aspect of life today.
Thank you so much, Siddharth. It's such a wonderful conversation.
Yeah, I think thanks a lot for having me here. I think it's always good to be able to share some life experiences. So yeah, thanks. Thanks a lot.
Thank you so much, everyone, watching today's episode.